Very quickly, we talk to traders every day around where they see the markets going right now and how vulnerable it is. Sitting at just about 3,600 points right now from a technical perspective. What are your thoughts on where to from here?
Well, I think it's going to hold. We might see a probable stagnation in another 1 or 2 weeks as we go closer to the elections. But I don't think that we are going to see a major bearish return to the bearish the bearish trend that we saw last year. Of course, we are all looking at the shilling and hoping that the central bank is going to at least make sure that we don't get into a situation like we did last year. And I think we're seeing a lot of foreign interest, and I believe that most of the foreign investors are seeing that Kenya as a frontier market is offering them a very good return prospect, and they feel that they should be taking positions while the stocks are still, quite competitively priced. And of course, we have continued to see them taking, sort of scalping, taking profits on small gains, which means that we should see a lot of liquidity on the market going forward.
Let's talk about the agricultural sector, because we've had coffee prices and tea prices both picking up in the latest auction. AA grade coffee coming in at 333 kilograms dollars per 50 kilogram bag, and then we also had tea ticking up to $3.68 per kilogram, and that's of course an increase. What are your thoughts right now on the outlook for those key commodity prices in light of the fact that we've got, of course, the shilling a lot stronger than where it was last year, and that which benefited the agricultural sector last year?
Well, that would definitely hurt their bottom line. Usually when the shilling is weaker, of course, since they primarily export their product, then naturally it's quite good for them. But I still think that international prices are still on the up and up, and that will be good for the investors. We usually see these companies pay hefty dividends, and therefore you usually will find that being largely locally owned and having majority owners who are not ready to let go of the stocks, then if they do pay a good dividend, then naturally we are going to see the share price go up, as there is going to be a mismatch between demand and supply.
Yeah.
That said, I think that we should be seeing good results from that side, but it tends to be very cyclical, very difficult to actually make a call, because it's usually a shift between international prices and of course the shilling and of course the weather.
As you say, all
and
factors,
how much production they have actually had.
I mean, all factors that are really out of the hands of the management's, out of their control. When you look at those factors, though, do we have companies like Sasiniti coming in and hedging at various levels in terms of the currency or in terms of those soft commodity prices?
Well, we haven't seen them do much in terms of hedging in the past. They don't have very strong hedging policies. I think the only company with a very definite hedging policy that is on the Nairobi Securities Exchange, is Kenya Airways. And so, in as much as they do have some level of risk management where they have a little bit of hedging, we don't see them doing that very heavily, and that tends to work against them, which means they're very, very heavily exposed to foreign currency movements.